Gentlemen, how are you guys feeling today? I hope everyone is feeling great and are ready for the next event. And what event is that? That event is to learn about trade settings. Yeah, today it's all going to be about trade settings. So welcome everybody. Welcome everybody. It's great to see all of you here today. Yeah, lovely, lovely, lovely. Now, before we begin, just a few things. This is a training. And I would like to have some interaction from all of you guys. So my first question to you is, are you able to hear me? If you're able to hear me, would you be kind enough to give me a thumbs up? Let me see how many of you can hear me. Thumbs up. MK, lovely. Thank you so much. B, VJ, thank you. Sasi Varman, thank you. Sabri, or is it Sabari? Sabari, thank you. Hyrule Anam, thank you. Lovely. Welcome, guys. So you can hear me. That's great. That's great. Today, we're going to talk about trade settings and understanding the interface, RoyalQ's interface. So you have better understanding and that you would be able to learn these interesting things and then be able to use it. But before we begin, the book. Do you guys have your book with you? You must have your book, yeah? You must have a book. And you must be able to take notes in your book. Every time we do a training, every time I do a training, whatever training, it could be on trade settings, it could be on signals, it could be on reward building, whatever training. Yeah, whenever you're coming for a training, you must have a book, a single book, one book, just one book. So everything that you are learning, everything that you're understanding should go into this one book. Standard book, just like an A4. Not A4, A5, simple, lot of pages inside. Yeah, lots of pages inside, right? What you do every time you attend trainings, the same training, it's okay. You can keep on adding notes. You keep on learning. So the more you learn, the more you understand, the more you take notes. Note takers. Remember this, yeah? Note takers will usually end up becoming action takers. And those people who take action eventually become money makers. So you have to start from being a note taker. Yeah, make sure you take your notes. It's very important. Yeah, so that you can also at one day be able to utilize this notebook for your own benefit. You can use that as your reference. You can use that as your Bible. You can use that as your go-to journal for your own growth and for the growth of your teammates. Yeah, I hope that was clear. So how are you guys doing today? How are you guys doing today? I hope everyone here is doing great. How are you doing? If you can go over to chat and type how you are doing, that will be great. So how are you guys doing today? How are you guys doing today? How are you guys doing today? Come on, guys, you can go to chat and type how are you doing? Alvin, doing great, sir. Lovely. That's great. That's great. MK, you're doing great. I love to hear that. Sasi Varman, doing great. Thank you so much. Yeah. Come on, guys. This is, after all, training, yeah? Mukungu Faus, you're doing well. Lovely to hear that. Yeah, doing. Arthur, you are doing and doing. Great. Keep doing, man. And you will get that results. Good morning, Leader Robert. I'm doing great. Glory to God. Lady Catherine, lovely to have you here. Great, 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 great. Yeah, so you have your notebook ready and you guys are doing great. Now let's take a quick look at the polls. As usual, 38% of you today are here for the very first time. This is trade setting. This is the first time I am doing this for this year. I usually do this on Sundays, but I have not done it on December. I did not do it in January for 2 months. Last was in November. Now I'm restarting. This session will usually be on a Sunday, yeah? Sunday. So 36% are here for the very first time. Okay, 32% are here for the very first time. And 60% have attended this training before. Lovely. Welcome, welcome. And then we asked about your rank. Some 17% say that they are new. They just came to observe. Lovely. So welcome. Welcome. I hope by the end of the session, you have some better understanding of how RoyalQ is set up. Yeah. Lovely. V1s, 65%. V1s, the most important thing you should do right now is learn, keep learning, keep improving. The more you learn, the more you understand, The more you can be independent, the faster you will grow and make more money. Lovely. V1, V2, 9%. V3, 4%. V4, 4%. I see Mr. Silva Anburaj from India is here. Yeah, one of the V4s. Great to have you. Mr. Silva, I'm going to put you as a co-host. Lovely. Okay, great. V5s. Okay, I'm a V5. I'm a V5. We may have some V5 joining us later. There are no V6, which is fine. It's okay. Great. Thank you for being here, everybody. Lovely to have all of you. So let's get started, shall we? Let's get started. Question number 1. I'm going to ask you this question, and then we'll take it from there. RoyalQ is a trading board. You guys know that. It is a trading board. RoyalQ is a trading board, which is great. My question to you is, why do we trade? Anybody can answer this question? Why do we trade? Why do we trade? Who can answer this question? Why do we trade? Sasi Varman is giving some answers. Sasi Varman says, for profits. Lovely. Thank you so much. Any other answer, guys? Why do we trade? Why do we trade? I got one answer. You are, after all, using a trading board. Why are you using it? Mukungu says to accumulate. Mr. Selva says accumulate. Lovely. Any other answers? Someone said profit. Few other people are saying accumulate. What do you think? Why do you trade? Why are you here? Why do you want to trade? Come on, guys. Someone else? I hope you guys are participating. I hope you guys can hear me. Yeah. Alvin, trade easier. Alvin, trade easier. Okay. Okay. Well, the reason why we trade, please take your book and write this down. Yeah. Please take your book and write this down so you know the real reason you are using RoyalQ. You're using RoyalQ to trade so that you can accumulate. Number 1, accumulate crypto. And number 2, to make profits. Both, yeah. You can accumulate and profit. That's the reason why we use the robot to trade. To accumulate and to profit. To accumulate and to profit. Write that down. Take your book and write that down. In today's class, this is a basic trade setting class. So we're going to go and do trade settings and all of that later on. But right now, your first note is that we are trading RoyalQ so that we can accumulate and profit both. We want to accumulate crypto and we want to profit from crypto. That's the reason we trade. Which is great. I anticipate this session to take about 2 hours. About 2 hours, maybe slightly more, 2.5 hours. So if you have your water, your tea, your Coca-Cola with you, that'll be great. Yeah, that'll be helpful to you. All right, let's carry on. So now you know why we trade, to accumulate and to profit. Let me just write that down here so you can get this. Why do we trade? Okay, why do we trade? I'm just writing this down. Why do we trade? 2 reasons. Number 1, we want to accumulate crypto. We want to accumulate crypto. And we also want to profit from crypto. Both these answers are the correct answers. Profit from crypto. Yeah, that's the reason why we are trading with RoyalQ. We want to accumulate and we want to profit. That's great. All right, that's great. Now let's move on. RoyalQ is a quantitative robot. Have you guys heard that before? Quantitative. RoyalQ is a quantitative robot. How many of you have heard this word before? Quantitative. Raise your hand. How many of you have heard this word before? Quantitative. Okay, Sasi Varman says yes. Robotax says yes. All right, Jimmy from Philippines is saying yes. Israel saying yes. Many of you are raising your hands, saying that you have heard this word quantitative. All right, lovely. So what is the meaning of quantitative? Anybody knows what does quantitative mean? Anybody knows what quantitative means? Go ahead, type it out in chat. Type it out in chat. What is quantitative? After all, this is a robot, yeah? It's a quantitative robot. So what is quantitative? Anybody knows? Go ahead. Type it out in chat. Let me see who can get the first answer, correct answer. Type it out in chat. What is quantitative trading? Quantitative trading. Anybody? Quantitative trading. Trading with numbers. Gokul says trading with numbers. Whatever type of trading involves numbers. Yeah. Whatever type of trading, whatever type of business, whatever it is that you're doing involves numbers. But what is quantitative trading? Maybe one or two more people. Small and more time profits by Mr. Selva. Okay. Okay. Very good. Any other answers? What is, you have to understand this. So you know what your robot is, yeah, so that you know how this robot actually will work later, yeah, to compound figures and to get a result. Now that's a very high-tech answer, yeah. Anthony from Gambia, something that is more largest. Okay, never mind. What I'm going to do is I'm going to explain to you guys what is quantitative trading. Let's begin, yeah. Quantitative trading. You have to write all of this down. You see, whenever I ask this question, you may have attended this session before, but if you're still not getting it, that means you're not taking notes. Make sure you're taking notes. Write down. Yeah. Quantitative trading. Okay. What is this? Quantitative. What does it mean? Number one, we are taking small profits. We are taking small profits over and over again. Small profits over and over again. Okay, again. And the next thing is the profits we take today, the profit we take today will be higher value in the future. Okay, higher value in the future. Quantitative trading. So we take small profits over and over again, and the profit we take today will be of higher value in the future because the value of crypto is going higher and higher. Am I right? So the profit we take today will be higher value in the future. So you have to understand this. This is what we mean by quantitative trading. Don't take a screenshot, guys. Don't take a screenshot. You're not going to look at it again. It will be in somewhere in your phone and then it will disappear, forgotten. Write it down inside your journal. Write it down inside your book. Write this down. So it becomes useful to you over a period of time. May not be useful now, but 1 month down the road, you have a small team, someone asks you this question, you can always refer to your book and answer them correctly. Yeah? You don't pluck something out from the sky. You have to answer them correctly. All right? Lovely. So we have seen these two things. You know why you are trading. You know what is quantitative trader. We are all quantitative traders. When we are using RoyalQ, the robot, we are all quantitative traders. Okay. Question number 3. I want to go on to question number 3. And then step by step, yeah, we'll get deeper into settings. Question number 3. Anybody knows what kind of robot is RoyalQ? Or what type of strategies that RoyalQ uses to trade? Anybody knows that? What kind of robot is RoyalQ? Anybody knows that? What kind of robot is RoyalQ? Or what strategies does it use to trade? Anybody knows? What strategies does RoyalQ use to trade? Oh, lovely, Sasi Varman. I think you have been taking notes. Yeah, lovely, Selva. You are giving the right answer. Great, great. So I see Sasi Varman has given the correct answer. Selva has given the correct answer. What about the rest of you guys? What type of strategies does the robot use? Yeah, Hiranjan, you are there, but not quite accurate. Yeah. Okay, now let me get back. Let me get back to our whiteboard. Okay, to our whiteboard. Let me just clear this. I want you guys to understand this, yeah. What kind of robot is RoyalQ? RoyalQ is, number 1, it's a martingale trading bot. And we are going to look at what is martingale in a short while. Martingale trading bot. It trades using the martingale trading strategy. Martingale trading bot. Number 2, it is also a grid bot. Grid, grid bot. Yeah, that is because it also has that behavior. Yeah, it has the grid bot behavior. It is able to sell different layers. And the speciality with our grid bot is it also uses the sub bin mode. We will go and explore this in a short while. It also uses the sub bin mode. This is what RoyalQ is. It is actually a very powerful hybrid robot. Okay, write this down so it'll be useful for you in the future. RoyalQ is a hybrid robot, and it's able to trade using the martingale trading strategy. It is also able to trade using the grid trading strategy and the sub-bin mode. So you have to remember this, yeah? This is what RoyalQ is. This is how it trades. I hope you guys can understand that. Are you guys learning? Are you taking notes? I hope you're taking notes. I hope you're taking notes. How many of you are actually taking notes? Raise your hands, please. How many of you are actually taking notes? Sasi Varman, yes. Selva, yes. The MK, yes. Sabari, yes. Yeah, what about the rest of you guys? Yeah, what about the rest of you guys? I hope you guys are taking notes, yeah, because it will be helpful to you. Yeah, it will be helpful to you. Right. Let us carry on. Let us carry on. Let us carry on. So you already know why we trade. You know what is quantitative trading. You know what kind of robot RoyalQ is. Let's get on to a question that is slightly more trickier. Yeah, slightly more trickier. I'm sure all of you have heard of this thing called spot market. Spot market. Yeah. All of you have heard this thing called spot market. What is the spot market? Anybody can explain to me what is the spot market? Why do we trade in the spot market? Why? 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 Why do we trade in the spot market? One reason. Why? Okay, Selva says no margin call. Okay, Sasi Varman says on spot buy and sell. We can also buy and sell in P2P market. We can buy and sell in futures market. Yeah, we can do that. But why spot? What's so great about spot? Why do we? Hiranjan, well done. Hiranjan, well done. Okay, invest without risk. All right, fine. Some of you are giving me some answers. Let's write this down as well, guys. I'm going to go back to my whiteboard. Okay, why the spot? Why spot? Okay, why spot market? Yeah, why the spot market? Why the spot market? Why the spot market? If you were to ask me, number one, question number one, for answer number one, very important is, number one, why the spot market? Because every time I buy, I own the crypto. Own the crypto. The crypto basically becomes yours. Yeah. When you are trading in the spot market, every time you buy, you own the crypto. You have to understand this. Yeah. You own the crypto. You never lose your crypto. You never lose your crypto. Number one, you own the crypto. Yeah. Number two, you never lose your crypto. Regardless of how the market is moving, you never lose your crypto because there is no margin call. Margin call in this sense is sometimes in the Forex market, when the market is moving against you, you may lose everything, wipe out, total loss. This does not happen in the spot market. So when we are doing all of this, this is what we call, we are able to manage our risk management. Okay, we're able to do all of this. Why in spot market? We own the crypto, number one. We never lose our crypto, and we can manage our risk well. This is the reason why we trade in the spot market using quantitative trading in RoyalQ. I hope this is clear so far. Yeah, I hope this is clear. All right, guys, everything is okay so far. Okay, are you all still able to follow? Everyone is okay? Are you able to follow? If you're able to follow, give me a thumbs up before we go on to the next topic. Yeah, great. Now let's talk about, so far we have spoken about why we trade, what is quantitative trading, what kind of robot is RoyalQ, why we trade in the spot market. Now I want to touch on floating loss. Next is about floating loss. Floating loss. Let's understand floating loss. What is floating loss? How many of you like floating loss? Anybody likes floating loss? Raise your hand. Anybody? Anybody? Oh, I think I shouldn't ask that. How many of you don't like floating loss? If you don't like floating loss, raise your hands. Those of you who don't like floating loss, I don't like floating loss. Who says I don't like floating loss? I see, right. I see many hands are going up. Yeah, many hands. Julius, Israel, Bumba, MK Kumar. I don't like floating loss. But here's the thing, guys. You do not have to fear floating loss. Yeah, floating loss is not your enemy. Yeah, floating loss is not your enemy. You can actually make use of floating loss. So what we're going to do now is we're going to understand floating losses and why you don't have to fear floating losses that much. Let's understand. Mr. Selva Anburaj says he likes floating losses. Is that true, sir? Do you really like floating losses? Yeah. Okay, let's carry on, guys. What I want to do is I want to open my whiteboard again. Let's talk about floating losses, yeah? Let's talk about floating losses. I believe you would be able to see the screen right now. Let's understand floating losses, okay? Let's understand floating losses. Floating loss, okay? Let's understand this. Because once you understand this, you no longer have to fear it. Okay, let's take a look at this, guys. Let's take a look at this. This is you. Okay, this is you. This is you. And suppose you had $10,000. Okay, this is you. And you had $10,000. And you were interested to trade gold. Gold. Yeah, you are interested to trade gold. You want to trade gold. I'll draw a gold bar here. Okay, you are interested to trade gold. This is a gold bar. Yeah, maybe I should change the color to look like gold. Okay, this is a gold bar. You are interested to trade gold. Okay, great. So what did you do? What did you do? You went, you took your $10,000, you took it to a goldsmith. This is a goldsmith. This is a shop. Okay, this is the goldsmith. This is a goldsmith. So what you did, you took your $10,000, you went to this goldsmith. Okay, this goldsmith, you went to this goldsmith, there's signboard there, goldsmith. You gave him your $10,000 and he gave you some gold. How much gold did he give you? Okay, let's write that down. He gave you, let's say he gave you in weight, yeah, in weight. In weight, he gave you, let's say 100 grams of gold. I don't know what's the price of gold right now. So I'm just going to say 100 grams of gold. 100 grams of gold. How much price did you pay for this? What is the price that you paid for this? You paid $10,000, correct? But you don't have this money with you anymore, yeah? You have given this money away to the goldsmith and he gave you 100 grams of gold. He gave you 100 grams of gold. Now, what you are thinking of is you want to sell this gold. You want to sell this gold and make some profit. You want to make some profit. Why? Because you know gold, the price of gold over years, over the last few hundred years, it has always been going higher and higher. The price of gold has always been going higher and higher. So you know if you buy and keep gold for a long period of time, you may make some profit. So that is the reason why you wanted to trade gold. So you went and bought $10,000 of gold. What is the date today? Today is 5th February 2023. You're hoping to sell. Very next day, you're hoping to sell. I don't know what happened in the gold market. Tomorrow, 6/2/2023, price dropped to $8,000. Price dropped to $8,000. You spent $10,000, you have 100 grams of gold with you, but now the price has dropped to 8,000. Now, what is happening over here? Are you in profit or are you at a loss? Are you in profit or are you at a loss? What do you guys think? What do you guys think? Are you in a profit or are you at a loss? What do you think? Yeah, are you at a profit? So someone says they are at a loss. Yeah, someone says there's a loss. Someone says floating loss. Yeah. Okay. Lovely, 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 lovely. So I'm getting all these answers. Joseph says it's a loss. Sabari says it's a temporary loss. Now let's get back to this, guys. Let's get back to this picture here. Let's get back to this picture here. Now, if you look at this, you are down. Yeah, you bought at $10,000, but now the value is $8,000. This condition is known as floating loss. It's not a real loss. It's a floating loss. It's not a real loss. It's a floating loss. Floating loss. It's not real. It's floating. Because whatever said and done, if you really look at this, look at what is happening, you still have your gold. This 100 grams of gold stays with you. This 100 grams of gold stays with you. Price may move. Price may move up. Price may move down. Correct? But here price has moved down. Floating loss. You're at a floating loss. And nobody is forcing you to sell. No one can force you to sell because this gold belongs to you. It is yours. The gold belongs to you. It is yours. Nobody can take it away from you. The gold is yours. The price is down. That's all. Now, you wanted to keep the gold. You wanted to keep the gold. But the very next day, you're hoping the price to go up, but the price dropped further. Price dropped further. It is now $7,000. On 7th of February 2023, the price has gone down to $7,000. Do you want to keep or do you want to sell? What do you think you should do? Price is going down, guys. You bought some gold. Price is going down. Do you think you should keep or you should sell? How many of you think you should keep? How many of you think you should sell? Come on, put your answer in chat. Sabari says keep. Sabari says keep. Alvin says keep. Yeah, come on, guys. The next day price may go down further, Price may go down further. Some says they want to buy more. Okay. Price can go. Sasi Varman says keep. What gives you that except for Yong? Yong says he should sell. Except for Yong. There are some people who say they should sell. Price is going down. But remember, nobody can force you. Yeah, nobody can force you. You can choose to keep. You can choose to sell. Whenever you sell, if you were to sell, whatever condition it is in at that moment will become real. Your floating will become real. Now, if suppose you sell at 7,000, yeah, then you will have to absorb the $3,000 loss. You have to understand that, yeah? Some of you wanted to keep, okay. So on the 8th of February 2023, something happens in the market. The price has now gone up to $11,000. Now, what condition is this? You bought at 10,000, the price is now 11,000. So what condition is this? What do you guys think? What condition is this? Is this a profit? Is this a loss? Alvin, you're getting it right. Lady Catherine says it's profit. Some of you say it's floating profit. And actually, the word for this is floating profit. This is a floating profit. It's not a real profit, yeah? It's a floating profit. Just like how you had floating loss, this is a floating profit. This is not a real profit. It's a floating profit. When does it become real? The only time it will become real is when you sell. Only when you sell. If you do not sell, it is always floating. Remember, yeah? Floating will only become real when you sell. So if you decide to sell over here, lovely, you now have $1,000 profit. Okay. Now remember, market goes up and down. That is the nature of market. But you have gold. What do you have? You have gold. And because you have gold, and gold has traditionally been performing well for hundreds and hundreds of years, you are confident of keeping it long-term until it gives you the profit. So there's nothing to worry about floating loss. So how many of you are going to sell when it becomes $11,000? Anyone wants to sell? If you want to sell, just type sell. I just want to know how many of you are going to sell. Go ahead. All of you want to sell. Just go and type sell. So I know you're going to sell and take your profit. Who wants to sell? Come on, guys. Who wants to sell? Type sell. Go to chat and type sell. Okay, MK, you sold. You made $1,000 profit. Yeah, Sasi Varman, you sold, you made $1,000 profit. Gokul, you made $1,000 profit. Excellent, 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 excellent. So I see some of you want to sell, yeah? Some of you may not want to sell. Some of you may not know what's actually still not happening, but it's okay. So once you have sold, the very next day, suppose on 9, the price goes up to 15,000. But you've already sold here, yeah? You've already sold here. Price goes up to 15,000. So what do you do right now? What do you do? What do you do? You've already sold. Some of you, you sold. You sold. Okay, some of you sold. So those people have sold. Next day price goes up to 15,000. What do you do? Actually, that's the right thing, yeah. That's the right thing. You don't do anything. You don't have to be worried about it. You've already taken profit. A profit is a profit. Small profit, big profit, doesn't matter. A profit is a profit. You took the profit and you're out of that particular trade, which is good for you. Yeah. Some of you may have waited. Price could have gone higher. Some of you would have waited. Price could have even gone lower. Doesn't matter. As long as you take a profit, it's okay. So remember, this is what we mean by floating losses. It's not something you have to worry about. It is all part and parcel of trading. Price will go up, price will go down. But remember, in the spot market, this goal always belongs to you. And because it belongs to you, you can actually take the time and wait until the market is conducive and the market is on your side and the market is profitable before you sell. All right. So did you understand floating losses? How many of you understood floating losses? Raise your hands. How many of you understood floating losses? Now, okay, lovely, 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 lovely. So many of you have understood floating losses, yeah? Great, 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 great. Now we know about floating losses. There's another thing that we have to understand when we want to trade this market, yeah? Another thing, and that is called dollar cost averaging. The next thing that we want to do is we want to learn about dollar cost averaging. How does this work? How do we calculate this? Dollar cost averaging. That's what we want to do. How many of you want to learn about dollar cost averaging? Anybody wants to learn about dollar cost averaging? Raise your hands. Raise your hands. How many of you want to learn about dollar cost averaging? Okay. What about the rest of you guys? Why is it that some of you don't participate at all? I don't know. Maybe you're driving or you are elsewhere or you're not able to participate. I don't know. But why is it that some of you don't participate at all? You don't raise your hand. You don't type. You don't turn on your video. You just stay there. Why? Are you guys still able to learn? Yeah. All right. Participate. If you can participate, yeah. All the small things so that you are involved. The more you are involved, the more you learn. All right. The more you are involved, the more you learn. All right. Great. Let's carry on. Let's carry on. Okay. Let's do this. Dollar cost averaging. Yeah. That's what we want to look at. Dollar cost averaging. We will do all of this theoretical work later on. We are going to go into trade settings in RoyalQ in a short while. Understanding dollar cost averaging first. Let's begin. Let's begin. Yeah, dollar cost averaging. So let's do this. I'm going to share my whiteboard again. Okay, I'm going to share my whiteboard again. And we'll get this done. All right. Dollar cost averaging. Let's clear this. You guys should take notes, yeah? Whatever it is, take notes. So it will be useful for you. All right? Dollar cost averaging. We want to learn about this. How do we calculate this? Okay? Let's take a look at this. This is you. Okay, this is you. This is you. Yeah, this is you. And suppose you have $1,000. How much you have? You have $1,000. Great, you have $1,000. And you want to go and trade, yeah? You want to trade. And you want to trade crypto this time. Suppose the name of the crypto you want to trade is XYZ. All right, this is the crypto that you want to trade. I'm just simply choosing a name as example, yeah? You want to trade this. You want to trade this crypto. And let's say your objective is to take 2% profit. You want to make 2% profit. This is your goal. This is your goal. Yeah. So let's write this down. I'm going to write here quantity. Symbol for that. Let me just put that as Q. Then I'm going to write here amount. Okay, amount. And the symbol for that is A. Now, let's say the price of XYZ currently, current price of XYZ. Current price of XYZ, let's say it's $100. $100 per coin, yeah? Price of XYZ is $100 or 100 USDT per coin currently. Okay. So you have $1,000, yeah? You have $1,000. So what you did, you went and you bought one coin. How many coins? One coin. How much did you pay for this? $100. $100. You paid $100 for it, yeah? You had $1,000. Since you have already used $100, now you have $900. You have $900 and one XYZ coin. That's what you have right now. Okay? What is the average price? How do you calculate the average price? Average price. The formula is very simple, yeah? Average price. The amount divided by the quantity. That will give you the average price. The total amount that you have spent divided by the quantity of the coins that you have. That's your average price. So A is 100, Q is 1. So your average price here is $100. Lovely. Yeah, lovely. Now you want to make 2% profit. If you wanted to make 2% profit, the market price is 100. It needs to go to 102. And if you sell it, you'll make a profit. But the thing is, suppose the market went down. Instead of going up from $100, let's say the price dropped to $50. Market has gone against you, yeah? This is where we started, but now the market has gone down. So you're unable to take this 2% profit because the price is now $50. So what can you do? Yeah, current price is no longer $100. Current price is now $50. Price has dropped. So what do? We have few choices. Number one, we can wait. We can wait for the market to recover, come back up, come to 102, and then we sell. But if we want to wait, we don't know how long we want to wait. Yeah, maybe we have to wait for a long time before the market comes here. Or we can do something to take advantage of this downtrend. What are we going to do here? We are going to buy. Okay, we are going to buy. And usually when we buy, there is a technique to buy. Let me say, let's just say I do a double up. So that means initially I spent $100. Initially I spent $100. Now the price is 50, yeah? The price is 50. I want to double up, yeah? I want to double up. That means I want to spend $200. Can I spend $200? Yes, I can, because I have 900 here, correct? So I want to spend 200. So I'm going to spend 200 over here. I'm going to spend 200 over here. How many coins can I buy? How many coins can I get for 200? Each coin is $50 right now. Am I right? Each coin is $50. So I can get 4 coins currently. So what is my current average price? Can anybody calculate? What is my current average price? Come on, guys. Can anybody calculate and give me the answer? How do you get the average price? Look at this. 100 plus 200. The amount I have spent right now, my position is 300 divided by 5 coins. 300 divided by 5 should give me the average price. So what is the average price? Who can give me the correct answer? Gokul, well done. Victor Naigam, well done. You guys are doing great. Yeah, you're giving the correct answer. Hiranjan, you're giving the correct answer. Lovely. Sasi Varman, you're giving the correct answer. So the answer is $60. The current average price, because we have bought this, yeah, because we have bought this, okay, we spent another $200. I now have $700 here, and I have 5 coins. Amount that I've spent for these 5 coins is 300. So that makes my average price 60. And if I want to sell at 2% profit, If I want to sell at 2% profit, okay, all I have to do is wait until the market goes up. Okay, 60 times 2%, that's 1.2. At 61.2, all the market has to do is go up to 61.2, and I can sell and make a profit. And if I were to sell at 61.2, guys, if I were to sell at 61.2, if you look at this, let me just show you this. This will be quite interesting. 61.2 times 50, times 5, not 50, because I've got 5 coins here. 61.2 times 5, I will now have I would have received $306. I spent 300, I would have made $6. In fact, because the market went down and then we bought and then we sell that for profit, I tend to make a bigger profit. If the market didn't go down and I only had 1 coin and I sold that, I would probably make $2 profit. $100, yeah, $100, 2%, $2 profit. Now I made $6 profit. If I didn't do this, for me to get this $2 profit, I would have to wait a long time. I would have to wait a long time. I don't know when the market is going to go up. I have to wait a long time and make a smaller profit. But because I bought this 4 here, with a small movement on an upward trend, I'm able to sell and make a larger profit. That is the reason why we do DCA. Now let's do this one more time. Yeah. Suppose the market didn't go up. Suppose the market went down further. Okay. Suppose the market went down further. It went down to, let's say, $25. Okay. The current price now is $25. Came down to $25. So what I want to do, I want to take advantage of this downtrend and I want to buy double up. So that means instead of 200, now I want to buy for 400. Can I buy for 400? Yes, I can, because I have $700. So I'm going to buy for 400. That leaves me only 300, yeah? How many coins can I get for this 400? 400 divided by 25. Can somebody give me the answer? How many coins can I get for 400? How many coins can I get for 400? Guys, how many coins can I get for 400? Current market price is $25. How many coins can I get for 400? 16. Vijay Kumaran, lovely. So we can get 16 coins. If I were to get 16 coins, now what is my average price? The total amount I have spent right now, the total amount that I've spent right now is 400 plus 200 plus 100. That is 700. And how many coins do I have? 16 plus 4 plus 1. So what is my average price, guys? Anybody can calculate that and give me? Anybody can calculate that and give me? What is the average price right now? We have spent $700. Correct. Lovely. Many of you are giving me the right answer. Wow, that is awesome. Sasivarman, you got that right. Vijay Kumaran, right. Victor Nayagam, right. Hiranjan, you are right. Alvin Nathan, you are right. Prabhash, you are right. MK, you are right. Lovely. So the average price over here now is 33.33. That is the average price. Average price. We have 21 coins, yeah? We have 21 coins. We have spent 700. Lovely. Our average price is 33.33. So all we need is the market to move up. I want 2% profit. 33.33 plus 2%. The market just needs to move up to about 34. 34. Market needs to move up to about 34 and I can still take my 2% profit. 34. Now, if I were to sell it at 34, you take a look at this here. 34 times 21 coins. This gives me 34 times 21. This gives me 714. I spent 700. Now I get 714. I make $14 profit. So the deeper I go, the bigger my profit. And I can take that profit in a shorter period of time compared to if I didn't go deep. The power of averaging and buying the dip. I hope you guys can understand this point. Everything okay, guys? Did you get it? Did you understand a little bit about dollar cost averaging? Anyone has got any questions? If you have any questions, Can raise your hands. Okay, let me just lower everybody's hand so far. Everyone is okay? Everyone is okay? If you're okay, give me a thumbs up. Yeah, everyone is okay. 33.43. Why did you say 33.43, Alvin? 33.33. I want 2% profit times 2%. That is it. Times 33.33. No, it's about 34. Alvin, it's about 34. If you want a 2% profit, it comes to about 34. 34 times 21. That should be your final profit. It's about $714. Okay, Alvin, I hope you guys are good. All right, I hope you guys learn a little bit about dollar cost averaging. Yeah, when we are doing this dollar cost averaging systematically on a downtrending market, that is what we call martingale trading strategy. Yeah, what we did earlier, that was martingale, dollar cost averaging. I hope that was clear. Yeah. Okay, now when we are buying the dip, there are various ways we can buy. One is called double up. One is called Fibonacci. And another one is called plus one. Let's talk about that, yeah? Okay, hold on. Let me just share again. Yeah, I'm going to clear my screen. When we are buying the dip, guys, when we want to use dollar cost averaging, when we are doing the dollar cost averaging, there are three types of buys. Dollar cost averaging. When the market is going down, we are buying. Okay, when the market is going down, we are buying. We buy at certain intervals. We buy, first buy, we buy again, we buy again, we buy again. We buy at certain intervals. Okay, this is buy number 0. This is buy number 1. This is initial buy. First time we buy, second time we buy, third time we buy, and so on and so forth. So there is a method that we buy. How much do we buy? First, the best way to buy the dip is for double up. We call that double up. Each time we buy, we want to buy double than the previous amount. If we bought here 1, if call number 0, we bought 1, call number 1, we want to buy 2 times. Call number 2, we want to buy 4 times. Call number 3, we want to buy 8 times. Call number 4, we want to buy 16 times. This is known as double up. Each time we buy more and more and more. But you have to remember, yeah, every time you're buying, you have to spend the fund or the capital that you have. So how much can you buy depends on your capital. How far can you go? Your capital dictates how many times you can buy. You have to remember that, yeah? Your capital dictates how many times you can buy. If you do not have sufficient capital to go very deep, you have to manage your capital properly. Okay? Double up. The second approach, we call it Fibonacci. Fibonacci, yeah? Fibonacci is like this. First buy is 1, whatever amount I bought, 1. The second amount, I'm going to buy 2 times, 2 times. The third one would be 3 times. How do we get Fibonacci sequence? Very simple. This plus this gives me this. You understand? So the next one should be what? This plus this. 2 plus 3 give me 5. It'll give me 5. So what will be the next one? 3 plus 5 will be 8. Now this is Fibonacci sequence. This is how it goes. So when you look at your capital, if you're unable to do double up, you can go for Fibonacci. Now, when you look at your capital again and you don't have enough funds to actually do a Fibonacci, you can do a plus 1. So how does the plus 1 work? First buy is always 1, yeah? Whatever amount, call it 1, multiple of 1. In plus 1, then the second one will be 2. 1 plus 1. The second buy or the second layer over here, plus 1, so it will be 3. Then plus 1, this will be 4 times. And plus 1, this will be 5 times. Okay. So these are the various different approaches in buying the dip. Among all these approaches, guys, ladies and gentlemen, among all these approaches, I want to share this with you here. Among all these approaches, double up is the strongest, is the most powerful. If you ever want to buy the dip, you should always look at double up, because this has the power to actually get you out of floating losses fast. This is the strongest. Fibonacci is strong. Fibonacci is strong. +1 can be used, but it's weak. Anything other than this does not work. I'll show a mathematical proof in a short while. Yeah, so double up is the strongest. You should try to use the double up the most. If not, Fibonacci. If not, +1. But other than that, it will be quite difficult. All right, for you to recover and come out of the trade. Double up is the strongest. Why do we use double up? Because every time we buy, when the market is going down, this is the current price. This is the current price. We are here, we bought here. Now this is the current price. When we buy a double up, we are bringing our average price closer to the current price. That is the objective. Every time we buy, we want our average price to be close to the current price. Say market goes down even further, we buy again. We want the average price to be close to the current price. Why? So that when the market moves in our favor, we can sell and come out with a profit. So the closer we are, the closer our average price is to the current price, it is easier to exit and close the position. You guys understand? I hope you guys understand. So far, okay, guys? Are you all still okay? Are you able to follow? Are you able to follow? Yeah? Okay, great. Anybody wants to see a working example on why we should use double up and why I say double up is the strongest? Anybody wants to see that? Yeah, anybody wants to see that? If you want to see, raise your hand and I'll show it to you. I'll show you some examples. Yeah, I'll show you some examples. I'm loading it up right now. Okay, I'll show it to you now. Floating loss calculator, right. Let me show this to you so you can see this for yourself, yeah? Okay. I hope you guys can see this. By now you should be able to see this. Okay. There's some calculation already done. Calculation is very simple. I'm just saying, you know, the first buy-in amount is $10. The starting price is 100. Quantity is 0.1. Okay, that means I am buying $10. The price of the coin is $100. So if it's $10, I had 0.1 coins. Okay. So every time the market, hold on, where did it go? Hold on, what happened? Okay, let me share this again. Let me share this again so you can see this. Okay, I hope the screen is loading up. Great. So over here, I'm just doing a simple calculation. Every time the market drops by 5%, I'm buying. Every time the market is dropping by 5%, I am buying. This is double up. This is for double up. So if it drops by 5%, 100 drops to $95. My buying ratio is 2. Then from 95, it drops another 5%. I'll buy for 4 times, 8 times, 16 times, 32 times, 64 times, 128 times. Can you guys see that? Okay. I hope that was clear. And on this side, it shows the floating loss. Each time I buy, how much is my floating loss? As you can see, the deeper we go, the bigger the floating loss is. The deeper we go, the bigger the floating loss is. And this is for double up, yeah? I've already done this for Fibonacci and +1. So I'm going to go straight to the comparison. Let's take a look at this. So these are the calls. Call 1, call 2, call 3, call 4, call 5, call 6, and call 7. Every time the market drops by 5%, I am buying. So as you can see, this is for double up, Fibonacci, and +1, yeah? In my first call, For double up, I'm buying 2 times. Fibonacci is also 2 times. Plus 1 is also 2 times. So you can see here, everything is the floating loss about 1.69%. When I go to call number 2, double up, it's 2.9%. That's the floating loss, 2.9%. Fibonacci, the floating loss is bigger, plus 1, and the Fibonacci about the same. Because why? Call number 2, I buy here 4 times. For Fibonacci, I'm buying 3 times. For plus 1, I'm also buying 3 times. So it's the same. This and this is the same. But by the time I go to call number 3, you see double up is only 3.72% floating loss. Fibonacci is 4.64. Plus 1 is getting bigger, 5.13. If I go to call number 4, you can see this is only 4%, but this 5%, but this is almost 7%. By the time I go to call number 5, this is 4.5%. This is 6.3%. Plus 1 has already gone to 8%, 8.61%. So the deeper I go, the bigger the range. Can you see this? By the time I reach my call number 7, I reach call number 7, but if I'm using double up, my floating loss is only 4.86. Fibonacci, I'm at about 7.2%, but at plus 1, I'm already at 12%. There are some people who use plus 0. If you're using plus 0, my God, this would be like almost 20% over here. Very, very big floating losses. So if you want to use, ideally, you must use double up. If not Fibonacci, worst case scenario, plus 1. So that is the calculation behind it. I hope that was useful. Interesting so far? Everybody okay, guys? Now you understand why we must use double up, I hope. Yeah? All right, great. Now you know that. Now you know that. Let's also understand different marketplaces. Hey guys, by the way, it's been 1 hour since we started this training session. 1 hour has passed. How was it? Did you feel 1 hour passing by? Did you feel like 1 hour has passed, or did it go fast for you? How is it going so far? Are you guys still okay? Are you still okay? Are you still okay? Yeah? Are you still okay? All right, lovely. I'm just reading all the information that's coming in. Alvin says time is flying. You sure, Alvin? Right? Very interesting. Okay, great, Hiranjan. Yes, okay, lovely, lovely, lovely. All right, now we are going to look at the differences between USDT, BTC, and ETH very quickly. Very, very quickly. So you understand this, yeah? Very quickly. What is the difference between USDT market, BTC market, and ETH market? So you can understand this. Okay, let's carry on. Today's training, guys, is more on for you to understand all the basics. All the basics. Yeah. Is this really important for you to be successful in RoyalQ? Maybe not. Maybe not. Because I know some people, they don't have to learn all of this, but they can still be quite successful just by copying things that work. But this is more suitable for those people who want to know how everything comes together, yeah? So this is more for knowledge, for your understanding, and for you to have this overall skill in using RoyalQ, all right? Let's carry on. Let's carry on. Let's carry on. Okay. Let's take a look at this, yeah? We have 3 different markets in RoyalQ. 3 different markets. One market is known as the USDT market. Then we have the BTC market. Then we have the ETH market. These are the 3 markets that RoyalQ focuses on. In the USDT market, the base currency, we call it the base currency, yeah? Base currency. The base currency is USDT. In the BTC market, the base currency is BTC. In the ETH market, the base currency is ETH. So what is the base currency? If you want to trade in the USDT market, you must have USDT as your capital. If you want to trade in the BTC market, you must have BTC as your capital. If you want to trade in the ETH market, you must have ETH as your capital. That's the difference. And the thing is, when you are trading in the USDT market, your objective is to accumulate USDT. If you are trading in the BTC market, your objective is to accumulate BTC. If you are trading in the ETH market, your objective is to accumulate ETH. You have to understand that, yeah? You have to think differently. When you're in the BTC market, you want to profit and accumulate BTC. When you are in the ETH market, you want to profit and accumulate ETH. When you are in the USDT market, you want to profit and accumulate USDT. Now, the key difference between USDT and these guys is that USDT is a stable coin. It's a stable coin. Its value doesn't fluctuate. So one USDT is at all times equals to $1. Now, it's not the same here. This dollar and this USDT is not the same. This is fiat currency. This is a cryptocurrency. This is a coin, a crypto coin. This is the fiat currency. Okay? Different, yeah? Different. It's not the same. So remember, USDT is a stable coin and it has no fluctuation. So when you are trading XRP versus USDT, the price of XRP may be fluctuating. The price of USDT does not fluctuate. You have to understand that, yeah? Only one side. When you are looking at the BTC or ETH market, these are cryptocurrencies that are volatile on both sides. For example, if you are trading XRP, BTC or XRP, ETH, BTC is also volatile. XRP is also volatile. If you are trading XRP, ETH, you have to remember ETH is also volatile. XRP is also volatile. So both sides are volatile. In the USDT market, only one side is volatile. The other side is pegged. It's stable. Now, the beauty is for you to be involved in aggressive trading and for you to make profits faster, it's ideal to go into the USDT market. If you want to go into a market purely with the idea of accumulation over a long period of time, it is good to go to the BTC or the ETH market. Now, the thing about the BTC or ETH market is, you know, BTC over a longer period of time, it tends to increase in its value. And you also know that BTC is a dominant coin, which means when the value of BTC goes higher and higher, the value of XRP or the other side also goes higher and higher. So you may see that they may be in a floating loss, but since they have been trading for a period of time, today their value may be higher than what their value was 2 months ago. You have to understand that, yeah? So these coins, this BTC market, if you're trading long-term on a cycle, it works really well. Even though it appears on a floating loss, but end of the day, when you look at their value, you would see that both sides would have increased. So you win in the long run. Okay, you win in the long run. USDT market, it is better for us to go for one shots. One shot. It's better for us to study the market and take appropriate action based on trends. And this will end up being more profitable, more aggressive, more profitable. BTC, ETH, longer term accumulation of those coins. I hope you guys can understand what is USDT, BTC, and ETH markets and how they function. So far, okay, guys? So far, okay? Okay, someone just asked me a question. What is your mentor name on RoyalQ? Oh, okay. Well, just my name. Just my name. If you look at my name, RUBUERT, and that's my name. All right, you can find me in the WhatsApp. In RoyalQ mentor list. Okay, you must drop your WhatsApp for us in case we need you for more clarity. I have my Telegram channel, Joseph. Feel free to join in my Telegram channel. Later, I'll give you the link to the channel. So join in the channel. All right. Okay, okay. Arthur, your information is golden. Thank you so much. Lovely. XRP BTC, you accumulate XRP. Hiranjan, no. XRP BTC, the objective is to accumulate BTC. We are trading one side to get the other side. We start off with a bit of BTC. We use our BTC to buy XRP. Price of XRP goes up. We sell the XRP. We now have more BTC. Price of XRP goes down. We use our BTC. We buy more XRP. Understand? Yeah. The objective is always to accumulate the base currency. Yeah, Hiranjan, I hope. Yes, Prabhash, I'll try to do a Q&A at the end of the session. Info, I don't know your full name. You just put this info. Yes, I will be giving the Telegram channel at the end of the session. For those people who stay right to the end. Okay, right to the end. Lovely. All right. Anybody want to share anything, Mr. Selva? You want to share anything before I proceed? You can unmute yourself and share something. I've been speaking for 1 hour. I need a break. Come on.
Yes, sir, it's a very excellent program, and so many times I'm seeing this type of trade settings and signal settings program, but every time is I learn new some techniques, new some terms, and new some information. So very exciting. So my income was very excellent growing because of your training is more training I attend so many times. So that reason only I will very happy and my team also very happy. So thank you so much, sir. Thank you so much
Lovely, lovely.
for your support, sir.
Lovely, lovely, lovely. Now, what I want to do is it's time for us to go and look at the dashboard. Okay. It's time for us to go and look at the dashboard. Let me connect. Let me connect my phone. Okay, let me connect my phone and then we would be able to look at the dashboard. Yeah? Look at the dashboard. All right, hold on. Let me connect first. Okay. Okay. Connecting. I hope I can do this. If I'm unable to do this, I won't be able to share my thing. Okay, hold on. Yeah, let's try this. Hopefully it works. Yeah, in the meantime, okay, just let me try this once more. Let me try this once more. Okay. Just give me a minute, yeah? Just relax, give me a minute. Relax and give me a minute. Oh, yeah. Back in business. All right. So now let me share my phone. I believe you would be able to see my screen right now. Okay, Mr. Selva, can you see my screen?
Yes, sir. Yes. Yes, sir.
Okay, lovely. So let's get this started, guys. Now we are going to go and learn about the dashboard. Yeah, dashboard. So I'm going to open RoyalQ. RoyalQ, my most important app ever. The app that changed my life, RoyalQ. Okay, we're going to go into RoyalQ. These are exchanges, Binance, Hobby, Kraken. These are all exchanges, even Gemini. It's an exchange. These are all the stuff that I have that helped me. This is my crypto page. Maybe you can do the same thing. Okay, so that's RoyalQ. These are my exchanges. This one tells me the price of Bitcoin, how Bitcoin is actually moving up and down. Very interesting. You should have this as well. Yeah, Bitcoin. Here you can see how the market is. Is the market greedy or is the market fearful? Very interesting stuff, this particular app. Yeah. Then there's crypto bubbles. Let me just show you crypto bubbles. If you were to open this, you can see how the market is performing right now. Gives you an overall picture. Yeah, gives you an overall picture. Okay. This is grit and fear. How is the market condition? How are people people are generally feeling optimistic right now. Overall, the market is optimistic. When the market is optimistic, price will go up. Price will go up when the market is optimistic. But I like when the market is fearful. When the market is fearful, you can actually accumulate more. Yeah, you can accumulate more. But the market is optimistic. That means price will go higher. Yeah. Then this is coin market cap. You get a lot of good information about coins, about exchanges, about market capitalization in coin market cap. Yeah. Let's go. And this is very important. Trading view. You should learn this as well. Yeah. You should learn this. Very powerful. You need this. Because when you have this, you trade better. If you know how to use trading view, you can trade better with the robot. Yeah. Now let's get into RoyalQ, guys. So opening up RoyalQ. Here we are. Make sure you have updated to the latest version. Yeah. You must update to the latest version. How do you see your latest version? Let me show you. You can go to mine. Go to mine. Okay, you go to mine. Once you go to mine, you go to system settings. Tap on system settings. You see here? This is the current version, the version 4.8.1. You should upgrade to this version. Okay? This version has got a lot more features. If you're not in this version, make sure you upgrade to this version. You can just tap on this. Just tap here. Just tap here. You can see it's already telling me it's the latest version. Can you see that? You can either update from here or you go to your Play Store and you update. Okay. This is done. Let me go to home. At the top here, guys. At the top here, right here. Okay. This is where you shift from your exchange to exchange. You can jump. I recommend that you have at least 2 exchange. I use Hobby. I use Binance. Yeah, at least 2. Have to. Because there are some coins that is not in Binance that is available in Hobby. There are some coins that is not in Hobby that may be available in Binance. Or if you are from US, you can use Kraken. Yeah. And if you can have another one of this, it will also be good. All right. So this is how you jump between the exchanges. Now I'm in Binance. This is in Binance because at the top here, it shows it's Binance. Yeah. So at the bottom, all these are the coins in Binance. All these are the coins in Binance. Some are green, some are red. Okay. Some are green, some are red. You can actually tap here to sort them. Well, it looks like Bake has got 16.25% growth. Yeah. You can sort it like this. Now, if you were to tap on this, if you were to tap, and then you can see here, here's BTC, here's ETH. If I were to tap on BTC, these are all the BTC coins. If I were to tap on ETH, these are all the ETH pairs, not coins, BTC pairs, ETH pairs, and these are the USDT pairs. Now, if I were to tap on Bake right now, if I were to tap on Bake, okay, just confirm this, you can actually see the chart. Shows how the market is moving, a general uptrend. But you can't do much analysis on this chart, yeah? This is known as a candlestick chart. Candlestick chart. Now, what is a candlestick? A candlestick shows how the market is behaving at a particular time range. This is a 4-hour time range. So each of this candle is 4 hours. Each of this candle is 4 hours. What happened in the market for this particular pair in the last 4 hours? This is all historical data. Okay. If I were to tap on 1 day, this is how the market behaved each day. General uptrend. General uptrend. Okay. Or you can look at 15 minutes, 1 hour. This chart in RoyalQ gives you an idea of what is really happening, but this is still not very powerful when it comes to analysis. For analysis, you have to go back to the charts that allows you to use plenty of indicators. Fibonacci retracement, true strength indicators, stochastic indicators. There are many indicators, yeah, for you to actually use that and to understand how the market is actually behaving so that you can make your decisions, buying and selling decisions. Yeah. But this gives a decent idea on how the market is behaving. All right. Lovely. So now I want to set up a trade. If I want to set up a trade, what do I do? Let's say I tap on bake. Now we have bots. Can you see bots at the top? Bots. Tap on the bot. Okay. Tap on the bot. You get this page. Now we can create bot. Okay. We are using the martingale strategy bot. This is maybe something in the future. Yeah. I don't know what it is as yet. Once it is out, probably once the developers develop this particular system, then we will be able to use it. Right now, we only use the martingale strategy bot. So I tap on martingale strategy bot. Okay. Then I tap on create. Okay, I come here. Okay, I come here. This is to sync with a circle. This is to create your own. In this training, we don't look here. We only look at creating our own, yeah? So that means we're going to go and tap on next. Then we come here where we can give all the settings. This is where we want to look at today. Trade settings. We are here finally. Trade settings. Trade settings, so we can give instructions to the robot. This is one way of arriving to this page. One way of arriving to the page. The other way of arriving to this side is like this. Okay. First, earlier on, I went from the list of coins here. Yeah, I can also go here. I go to strategy. I tap on strategy. Okay, I tap on strategy. Okay, I tap on strategy. After I've tapped on strategy, I can tap on bots. At the bots. Now we are here. Now you know what to do. Martingale bot. Then create our own. Search for whichever coin. We can actually search here. Search. Let's say I want to go for bake. Okay, that's your bake. Tap on that and you are here. So these are the various ways you can actually reach this page. Okay. Stop here. So far, how are things, guys? Are you still able to follow? Are you still able to follow? We're going to talk about trade settings, yeah, and understanding all those instructions over there. Still okay? Having fun? Are you having fun? Right. Lovely, lovely. What do you guys think? Is this training worthwhile? Is this training important for you? Does it actually make sense for you to learn all the things I'm showing you? Is it valuable to you? If it's is it valuable to you? If you could type it in chat, at least I know if I want to do this kind of trainings in the future. How many of you think this type of training is valuable? Okay, valuable, Selva, valuable, Olusugun, crisp. Okay, all right, all right. So many of you say that this is valuable. Okay. Okay. Let's carry on. This is not new. Someone says it's new. No, this is not new. I've been doing this almost on every Sunday basis. Almost every Sunday basis. But I didn't do it December and January. December, end of the year, there's Christmas. Then there's New Year. Then there's many other festivals. Today in Malaysia, by the guys, how many of you are from Malaysia today? In Malaysia today, there's a big festival going on. Yeah, every time in Malaysia, there's a festival. There's Chinese New Year, there's Pongal, the Chinese New Year. Today, it's Thaipusam. Big, huge festival that's going on. Huge. Millions of people are participating in that festival right now. Millions of people, yeah. It happens in a place called Batu Caves. It's a temple, yeah. It's a Hindu temple, but millions of people go there. It's crazy. I don't think I can go there now. I think I'll be going there next week because the crowd will be like crazy next week, yeah. So maybe next week I won't do the training. So anyway, coming back to this, let's carry on. Let's carry on. Okay. Okay. Let's try to understand trade settings. What is the coin pair? What is the name of the coin pair? You are seeing it right at the top. Yeah, the name of the coin pair is, where did it disappear? Okay, hold on. Name of the coin pair is here. Can you guys see this? This is the coin, yeah? Bake USDT. We're going to learn trade setting. We're not going to trade this coin. I'm just going to go through this and understand all these various settings so you know what to do. Okay, this is the coin. What we are doing here is giving instructions to the robot. Okay, giving instructions to the robot. Let's go to trade setting first. Trade setting is at the bottom. Here, trade setting. Okay, we're going to go here. Let me tap on trade settings. We're here. Let's take a look at this. Let's take a look at this one by one, yeah? One by one. First buy-in amount. If I want to edit these values here, I need to tap on edit, yeah? Can you see here? Edit. Okay, edit over here. I need to tap on that first. So I tap on edit. First buy-in amount, this thing. First buy-in amount. This is telling the robot how much I want to buy. Initial buy. Remember, buy number 0, initial buy. Let's say my initial buy is $15. $15 is the minimum amount recommended by RoyalQ. Guys, $15. You should never trade less than 15. Do not trade less than 15. If you trade less than 15, you will end up having errors. Okay, you'll end up having errors, and you don't want to have those errors. $15 minimum. All right? Okay, well done. Now let's take a look at the next thing. Open position double. What is this? You see, if we have set first buy-in amount as 15, and I go and turn this on, you see now this is blue color. It's not turned on. If I have turned it on, that means when the robot goes and buys, it will buy, instead of 15, it will buy double, it will buy 30. My first buy, first buy, and the zero call zero will be 30. Okay. If this is off, I've offed it, you can see it's now gray. Then my first call will be this amount, 15. Okay. Now, guys, do you understand these two things? If you understand these two things, come to chat and type 1. Come to chat and type 1. Did you understand these two things? Okay, Vijay Kumaran. What about the rest of you guys? Only 3 people? Sabari. Okay, now it's coming up. Plenty of you understand. Great. Clear this. Okay. Next. Margin call limit. Margin call limit. You can see here, yeah? Margin call limit. 7. If I put here 7, let me go to margin configuration now. Margin configuration, yeah? I tap on margin configuration. You will notice that I have 7 calls. Can you see this? I have 7 calls. 7, 6, 5, 4, 3, 2, and 1. Can you guys see that? Yeah, 7 calls. Let me go back. If I were to change this, let's say to 4, okay, and I go to margin configuration, you will notice that I only have 4 calls. 1, 2, 3, 4. You guys can see that? So this thing, basically tells the robot how many calls we want to do. Now, this is actually dependent on the amount of capital that we have. Okay, this is dependent on the capital, but we'll look at that later. Right now, I just want you to understand this. So 4 calls, all right, 4 calls. So let's take a look at this. I'm going to use an example with 4 calls, yeah? Or maybe, never mind, maybe I'll go to 7 calls. It's okay, 7 calls. And let me go into margin configuration. Let's understand margin configuration, yeah? Now with 7 calls, I will have 7 calls here, which is great. My configuration, my multiple buy-in ratio, can you see this? Multiple buy-in ratio, I'm using double up to 4, 8, 16, 32, 64, 1 to 8. This is all double up. Okay. Take a look at these numbers here. These 2 numbers. Whole position take profit ratio and whole position take profit callback. Write this down somewhere because we're going to learn this now. 1.3%. Whole position take profit ratio is 1.3%. And take profit callback is 0.3%. Okay. Just write that down somewhere because we're going to use this. Sometimes in trading, take profit, we just say TP. TP is take profit, yeah? Take profit. And this is take profit callback. TP. TP means take profit. Take profit. I go to margin configuration, yeah? Margin configuration. I go here. Let's understand this. So we have 7 calls. We have 7 calls. This first call, 3.5%. Okay? 3.5%. What does this mean? What does this mean? Let's understand this. We bought here first, our first call. Our call number 0. We bought for $15. We bought for $15. We want the market to go up, but the market went down. Okay, the market. Let me just use a thicker color. I hope I can choose something that is thicker. And I choose something that is thicker. Okay. Okay, yeah. So market went down. Let me clear this. Okay, we bought for $15 and the market went down. Market went down. Market went down. Once the market has dropped by 3.5%, because here's 3.5%, yeah. Once the market has dropped by 3.5%, this is 3.5%, okay. What happens is the robot gets ready to buy. It won't buy. It will not buy here. Market has dropped 3.5%. It won't buy. It just gets ready to buy. Yeah, it just gets ready to buy. When will it buy? When will it buy? It will now monitor the market. It will see how much further can the market drop until the callback happens. How much callback? How much callback? I need to go back to the previous page. You have to see here, yeah? Buy-in callback. Can you see this? Buy-in callback, 0.5%. Okay, 0.5%. Let me just remove this for a while. Let's go back to margin configuration. So once the market moves up, over here, yeah, moves up by 0.5%, this is where the robot will buy. This point, this is where it will buy. Okay, this is where it will buy. Right here, right here. It will buy right here. How much will it buy? It will buy for 2 times of the initial buy. So over here, it will buy for $30. All right. So first call is done. First call is done. It's done. Observing. The robot is observing the market. Is the market still going to go higher? Is the market going to go lower? It doesn't know. Observing the market. Yeah. Suppose the market goes down. Suppose the market goes down after this. If it drops by another 4%, if it drops by another 4% from the last position it bought, if it drops by another 4%, because second call is 4%, it gets ready to buy again. It now monitors the market until the callback happens. Callback is 0.5%. Until the callback happens, then it will buy here. How much will it buy? 4 times. 4 times 15, this will be, it will buy for $60. So that's how it keeps going lower and lower and lower and lower. Every time it goes and it drops by this percentage, it will start monitoring, wait until the callback happens, and then it will buy. Yeah, up to 7 calls. Because we set it as 7 earlier. All right, guys. So now I believe you will understand about margin call limit. You understand about buy-in callback. Yeah, you understand what's actually happening, how it's buying, more or less. You understand about margin configuration. Yeah, I hope you guys can understand this. All okay so far? Okay so far? If you're okay, give me a thumbs up. Okay, great. Great. Now let's get back to this, yeah? Let's get back to this. Whole position take profit ratio is 1.3% and the callback is 0.3%. Now let's understand that as well. Let's understand that as well, okay? We bought here. Okay, let me just clear this. Suppose we bought here. Now the price is going higher and higher and higher and higher. Our take profit is 1.3%. We have achieved 1.3%. Will it sell here? No, it won't sell. The robot simply won't sell. Yeah, it won't sell. It won't sell. It's now monitoring the market. It gets ready to sell. After this 1.3%, it's monitoring the market until the callback happens. The callback is 0.3%. This is where it will actually sell. And this is your real profit. This amount. This is the reason why we are using a robot, yeah? Because a robot helps us to maximize the profit. If you are doing this trade only in the exchange, you can actually set a limit for the robot, for your trade to be closed. You can set the limit. But the thing is, there's no way you can actually maximize profits. Yeah, you can't maximize profits. That is the reason why we use robotics, so that you can maximize your profit. Let me now clear this. Suppose call 1 happened. Market drops. Robot gets triggered to make the first call. Callback happens. When this callback happens, your average price now is somewhere around here. Let me change the color so it becomes more obvious. This is your average price. Suppose your average price is here. Okay, because you've already bought, yeah, you've already bought. Call number 1 has happened. This is your average price. This is your current price. This is your current price. This is your floating loss. This gap is your floating loss. If the market moves up, touches this and goes up by 1.3%, the robot gets ready to sell. And once the callback happens, this is where it will sell, and this is your profit. And this is your profit. So we can actually go with the flow. The market is dropping, we are buying, the robot is observing, and at the right condition, it is able to buy the dip, and at the right condition, it is able to sell and give us a maximum profit. I hope you guys can follow this. Yeah, I hope you guys can follow this. Let me just clear everything on the screen. Let me go back to the previous page. So right now, we have covered pretty much everything over here. Yeah, I think pretty much everything over here. Great. Next, we're going to look at sub-bin. Okay, we're going to look at sub-bin. But before that, let me come back to the main page. How is it going, guys? Everything still okay? Everything still okay? Anybody has got any questions? Anyone asked to ask? Anybody want to ask anything so far before I go to sub-bin? You can actually type your question in chat. Yeah, you have any question, type in chat. I want to see what kind of questions you have. Answer that question and then move on to sub-bin. Anybody? Anybody? Everybody okay? Okay. Can I go to sub-bin right now, guys? Can I go to sub-bin? Give me a thumbs up if you're ready for sub-bin. Okay, lovely. Let's go to sub-bin. Okay, we're back here. If you look at the bottom, these two, yeah, you'll only get these two if your margin call limit is 5 or more. Yeah, it must be more than 5. More than 5. More than 5. Then you will get these two. Let me just show you, yeah. If I were to put this as 4, you see, these two things will disappear. This will disappear. If I change the 7 to 4, it has gone. Can you see that? The two, that two, what you call that, the two parameters is now gone. Okay. If I put to 5, you'll get it back. Can you see? 5, it's back. Okay. Let me just change this. 15, I put this to 5. Okay, 5, then you get this 2 back. So these are for sub-bin. We're going to learn sub-bin right now. So now, once you have sub-bin, can you see this distributed and take profit allocation? Here, it is written as 1.3%. Okay, fine. Just keep that in your mind for a while. And sub-position callback is 0.3. Okay, keep that in your mind, yeah? Keep that in your mind. I'm going to change this to 7. So my sub-bin, I'll have 3 positions. I'll show this to you. Let me go to here. Okay, let me go to here. You can see position 4, position 5, 6, position 5, position 6, and position 7. What does this mean? Okay, let me explain. When we are buying the dip, this is call number 0. Market goes down. We do call number 1. Market goes down. We do call number 2. Market goes down. We do call number 3. And each time we are buying, remember, we are averaging the price. Yeah, we are averaging the price. When we bought call number 1, we had 1 price over here. Yeah, we had 1 price. This is our current price. When we bought call number 2, our average price changed to here. When we bought call number 3, our average price came here. Then when we bought call number 4, we made call number 4, fourth buy. This is no longer our average price. Our average price comes closer to the current price. This is where we are. Suppose the market continues to go down. Market continues to go down. Okay, market continues to go down. Now this is layer 5. It triggers layer 5. When it triggers layer 5, what actually happens is, with the sub-bin mode, this happens, yeah. When we buy layer 5, we'll also have a new average price, and we will also have an average price at this particular layer. Yeah, so now we have 2 average prices. One is the whole average price, which is this, and this is only for layer 5. Now we got 2 average prices. So now if the market were to move up by 1.3% here, layer 5 can be sold separately. Yeah, layer 5 can be sold separately, and we take the profit. And maybe the market, instead of crossing the whole average price, it goes down again. So when it goes down again, we can buy layer 5 again. And suppose it comes back up here again, we can sell layer 5 again, take another profit. And suppose it goes down again, we buy again. Layer 5 alone, yeah? And then it comes back up again, we sell layer 5 again, take another profit. Sub-bin allows us to take this particular profit for layer 5. And suppose the market drops further, it drops below. Over here, this is layer 6, yeah? Layer 6, we're buying layer 6. We're buying layer 6. When we buy layer 6, what will happen is, this average price won't be there anymore. We'll get a new average price. We'll get a new average price. So now we have 3 different average prices. We have for layer 5, we have the whole average price, and this is for layer 6. Suppose the market now goes up over here, it sells, take the profit, come back here, buy, goes up again, sell that, comes back again, buy that. We can do that for the individual layer. Sub-bin mode allows us to work on that individual layer. And we can take that profit. We can take that profit and take it out as our revenue, or we can take this profit and reduce our average price. We can also do that. We can bring this even lower using this profit. So there are 2 things that we can do with the sub-bin mode profit. Either we can take it out or we can use it to reduce the average price even further. The power of sub-bin. Okay, the power of sub-bin. Now let me go back. We are here. How does the sub-bin mode actually work? We set it in the strategy mode. In the strategy mode. Now, if you were to tap on the strategy mode, you'll get these 3 choices. You'll have the whole warehouse mode, sub-bin mode, and sub-bin mode real-time settlement. Now, if you have selected whole warehouse mode, that means there will only be one average price. Only one average price. When it buys for layer 5, it will not create another average price, yeah? Only one average price. Every time it buys, only one average price. This is whole warehouse mode. There may be sometimes you may want to use this. Sub-bin mode, there are 2 options. One is sub-bin mode real-time settlement. That means every time it sells layer 5, takes the profit, you can take it out as revenue. Okay. And then it sells layer 6, gets that profit, you can take it out as revenue. Pay the gas fee, take it out as revenue. That is for real-time settlement. This is super powerful. Extremely powerful when you use it to close positions. Suppose you have been in floating for a period of time, you can use sub-bin mode to close positions. Because now we can use the profit to reduce the average price even further and bring the average price lower and lower and lower and lower until we sell it off. You guys understand? So this is sub-bin mode. This is very powerful for coming out of floating positions. All right? Now let me just clear this, cancel this, show you guys a few more things after this. How is it going so far? Everybody still okay? Do you guys understand the sub-bin mode? You guys understand the sub-bin mode? All okay? Okay, let me show you an example of the sub-bin mode at work. Sub-bin mode at work. Yeah, let me show you this. Okay, let me show you this. Okay, let me show you this. I want to open XRP. I want to open XRP because I was floating in XRP for a bit of time and I used the sub-bin mode to come out. So I'm going to XRP USDT. Let me go to transaction records. Where are the transaction records? Right here. Okay, that's the transaction record. So I'm going to tap on this. Okay, let's take a look at this. Okay, so as you can see, this buy, when did this happen? Long time ago. Can you see this date? 2022, 1106. Okay. How much did I buy? My deal was only $15. Okay, $15. Started the trade. Okay, started the trade. And then this was buy zero, the initial buy. This buy zero, initial buy. And this is buy number one. Buy number one. When did this happen? 1106. Market was going down, so it bought. Okay. Then this is buy number two. How much did it buy? About 44.89. When did this happen? 1107. November of last year. Yeah, November of last year. Okay. Then this is buy number three. It is buying for 70, almost $75. November 7. Market was going down rapidly at that time. So it's buying. It's triggering all the buys. Okay, it's triggering all the buys. This is call number 3. Let's carry on. This is call number 4. Correct? This is call number 1, 2, 1, 2, 3, 4. Yep. 1, 2, 3, 4. Yep. This is call number 4. When did this happen? 1108. How much? About $120. Market is still going down. Call number 5. This is now moving into sub-bin, yeah? Sub-bin. Sub-bin. Moving into sub-bin. Call number 5. 1109. How much? About $195. Okay. Call number 6. This is call number 6. Call number 6. Call number 6. This is also sub-bin, yeah? Sub-bin. How much? About $315. They were already bought. Market is still going down. Okay. This is call number, no, this is call number 6. This is selling off layer 6. Layer 6. When? 1110. How much profit did I make for selling this particular layer? $10. 3.31%. Okay. What did it do with this $10? This uses the $10 to reduce my average price. Okay. Reduce my average price. Why? Market went down, came slightly up, it sold. All right. Great. It is buying layer 6 again. It is buying layer 6 again. How much? About $315. It's layer 6 again, yeah? Then it sells layer 6 again. This is selling layer 6 again. This time I made $11. So I'm using this $11 to reduce my average price. So my profit here is $11. Layer 6, yeah? Layer 6. So every time if I were to check my balance, my USDT balance, my balance will increase. My balance here increased by $10. Here it increased by $11. Then it is buying again. This is layer 6 buy. Market went down further. Here it bought layer 7 for $500. Layer 7, yeah, layer 7. This is January 16. So it took a bit of time to actually come out from this. January 16. So XRP, it is selling layer 7 right now. Layer 7, I made $4 profit here because the percentage was small. Maybe this was because there was a very, it went up and then dropped further very quickly. So it's okay. Sometimes it happens. Layer 7 was sold. Buying again, layer 7. Buying again, layer 7. Selling again, layer 7. All right. Selling again. So as you can see, buying again, layer 7. Selling again, layer 7. Buying again, layer 7. Selling again, layer 7. And you guys can see this, right? And it's reducing my average price each time. Buying again. Yeah, buying again. And then sell again. As you can see this. This is layer 7, yeah, layer 7. We are now at layer 7. My layer 6 is still there. This is at layer 7. Buy again, sell again, layer 7. Now this is selling off layer 6. And what I did, by this time, my average price was so much more closer to the current price, and then the market was already shooting up. at more than 5% over here. This I did a manual sell. I just sold off everything. $404, made a decent profit of $23. So as you can see, if I were to add everything up, right, my profit is not only $23, it's $23. It's all this. These are all my profits. 10 plus 11, that's 21, plus 4 is 25, this is 29, 29, 36, 42, 46, 51, 56, 56, 59, 59 plus 20 is how much is that? It's about almost about $80. It's slightly more than $80. Slightly more than $80 through this run. Can you guys see this? All this is the power of sub-bin when you're actually using it properly. I hope that was clear. Now, do you understand a bit more about sub-bin? Guys, do you understand a bit more about sub-bin? Was it interesting? Yeah, if it was interesting, give me a thumbs up. I'm going to give you one more example after this. Okay? All okay? Great. One more example. Let me see whether I can pull that up as well. Let me see if I can pull that up as well. Okay? I think it's already sold. I think I can do this right now. Let me just show you guys this. Okay, let me just show you this. Okay. Okay, when did this sell? 5. All right. Okay, I want to show you guys another example, yeah? Another example. I'm pulling up Gala. This is Gala. Okay, with our settings, with our Gala. I want to show you this. This is my settings. Very simple settings. You can see that my first buying amount is $4. Then I put four layers. I wanted 3% profit. Here you can see this is very small, 0.01, correct? 0.01. The reason why I did this is the moment it went and hit that 3%, the moment it hit that 3%, I wanted to quickly sell and exit. Yeah, that is the reason why this is 0.01. The default value will be 0.3. Okay, 0.3. So this is my margin configuration. You can see here. Very tight, 0.75, 0.75, 0.75, 0. Why? Because I'm looking at the charts for this particular coin pair, and then I see that it has, let me just draw this again. When I was analyzing it, okay, it may drop up to 3%. Okay, 3%. So I just wanted to go within this 3%. I don't want to take, because I'm doing one shot. I want to go in, take the profit, and then come out. Yeah, and I'm using double up. This is my settings. Okay, great. I've done this. So now let me go back and let's see how it worked. Okay, this just sold. So I'm going back to our transaction records. Transaction records is right here. Transaction records, I'm going here. As you can see, this sold and just gave me $16.95. When did this happen? It happened today at 3 o'clock. Just when I was about to start this class, yeah, about to start this training, I made about $16.95. Okay. So as you can see here, this is buy number 0. When did this happen? Buy number 0. This today early morning. Buy number 0. How much did I buy this for? $20. Then over here, my first call, buying it for $40 today as well. My second call, I bought this for $80. My third call, I bought it for $160. My fourth call, I bought it for $320. And then it sold off everything at one go because 4 layers, it doesn't do sub-bin. 4 layers doesn't do sub-bin. 5 layers, 6 layers, 7 layers, yeah, we can do sub-bin, yeah. 4 layers, no sub-bin, full warehouse. So everything was sold at one go. Yeah, $38. Yeah, that's the total amount it has spent. And I made a profit of 16.95, which is quite decent. Okay, quite decent. So I did Gala before. Okay, as you can see many times. Yeah, over here the profit was 3.83. You guys can see these settings. Yeah. So I like when I go to USDT market, I like to go one shot. I like to look at the charts and then set my trades accordingly, and then I'll forget about it. Let the robot do its job, and then it'll come out and give me some profit. Yeah, so that's how we work. I hope that was clear. I hope that was clear on how we do this. Was that interesting, guys? Was that interesting?